to look at Paycom software stock in this video, evaluate the company's three major risks it's facing right now, look at the company's valuation as I did a proprietary DCF model on Paycom to calculate what I think is a fair value for this business. And then I'll also look at valuation on a forward price to earnings basis, all to come to the conclusion on whether or not this stock is a buy right now. I'll give this stock a rating on a scale of buy, hold, or sell and let you know what I think of this business at current market prices.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So the first risk I'm going to mention is data privacy risk. Now, many companies face this data privacy risk, but it's more concentrated for Paycom, being that it handles such critical information for businesses and individuals. And it's already had some issues here. In May of 2023, Paycom experienced a data breach involving unauthorized access to external systems, leading to the exposure of sensitive information. If these types of incidents continue or become more common, that can erode client trust and damage Paycom's reputation, leading to attrition, leading to customers saying, you know what, we're not going to renew our contract with you. We're going to go with a different provider. The second risk I'm going to highlight are regulatory and compliance challenges. There's always legislative changes, and the changing landscape means Paycom needs to update with new state and federal laws that require constant updates to its compliance strategies. So not only does it need to have excellent compliance strategy, it needs to be able to be adaptable to new and incoming legislation, which is always changing depending on the politician or the politicians that are in power in the areas that Paycom operates. That's not going to change. So what needs to happen is Paycom needs to develop this core competency in dealing with regulators. And that's something that if they don't maintain that skill, it can be a huge risk to its business because there's going to be that challenge continuously as the business operates in a sensitive business segment. And last but not least, competitive and technological disruptions. So emerging companies like Rippling offer integrated HR solutions, which could attract some customers seeking more comprehensive services. Paycom is more of a pure play, and some enterprises might look for a full suite of solutions and not just what Paycom offers. Additionally, AI and automation may lead to new entrants offering more innovative solutions, which could increase the competition for Paycom longer term. So, as the market matures, growth opportunities are becoming limited, requiring Paycom to differentiate itself through innovation and customer service. So now that we looked at the company's major risks, I'm going to share with you my proprietary discounted cash flow model for Paycom software. Now, in this video, I'm just going to focus on the outcome of this calculation. I'm not going to go into detail on how I calculated each step. I do have videos that go into detail on how I calculate each step in my DCF. I have those as member exclusive videos. So if you want access to those, join my channel as a member. For this one, I'm just going to focus on the outcome, which is the intrinsic value per share. And for Paycom, I calculated the value of this business today at $126. The current market price is $223 as it updates during the video. There's an embedded formula that updates the current market price during trading hours. And so at its current market price, which is close to its 52-week high, by the way, the 52-week high is $242 and the 52-week low is $139. So it's trading near its 52-week high as the business is relatively safe amid rising tariffs. Enterprises, it's a high cost of switching to a different provider. The recurring revenue with existing businesses, the retention ratio is relatively high for Paycom, and the company is not exposed to tariffs. Now, the first quarter GDP numbers in the United States were negative, and if businesses are hiring fewer people, then of course that's negative for Paycom software. The more people that are employed, the more paychecks need to be processed, the more people need to be paid, the more people paying, the more businesses paying people. That's all good news. So increases in economic activity are good for Paycom, and decreases in economic activity are not good. And the first quarter US GDP, we had negative GDP. But the primary source of that negative GDP was an increase in imports, which doesn't detract away from employment in the United States. Still, the business looks overvalued at the current market price, according to my discounted cash flow calculation. But I also like to look at the forward price to earnings ratio, and I get the forward price to earnings ratios from finchat.io, and the business is trading at a forward PE of 25.82, which I would say is fairly valued for this business. It's traded more expensively before at a forward PE of over 45, and it's traded lower at a forward PE of around 18. So around 25.82. I would say it's fairly valued according to this metric. So I've shared with you 2 out of the 6 steps in my valuation, in my decision making framework for evaluating stocks. Valuation is one of the steps in my framework, and looking at risks, evaluating risks is another step in my framework. But when I consider Paycom comprehensively and I consider all of the company's pros and cons and decide whether or not I would rate this stock as a buy, hold, or a sell, in my ranking, it rates as a hold or a market perform. So if investors were interested in Paycom stock, I would wait for a better entry point to buy this business. At the current market prices, it looks a little rich to me for a business with not that much of a great growth prospects. It does have a relatively good profile in terms of the risks in the current market environment and how it's not directly exposed to tariffs and the high retention ratio of its customers as a result of the high switching costs. But still, I would just wait to get a better price. The current market price, in my opinion, is too much to pay for this business right now. So I would wait for a roughly 10% pullback in Paycom stock before considering buying this business. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.